when people start doing things like that, when they start taking money from the cash value, does it actually hurt their longevity of their policy? Put money in IUL and take it out and never have to pay it back. And I go, yeah, but there's interest against it. So, like, from a carrier rep, like, what is your correct answer or thoughts when it comes to that? Like, you can borrow money, never pay it back. Is that a good idea, or you should try to pay it back? Like, what is your thought on that?
Yeah, I guess I would say that it just depends on the client. So if you take out money out of your IUL, you don't have to pay it back because it's just going to deduct from the death benefit when the person dies. So it is better to pay it back, no question, because you're going to have a higher death benefit, but you don't have to. When you take out money as a loan, as a variable loan, you're still earning interest off of the money that you still borrowed out. If you take a straight withdrawal and you take out 99% of your cash value, probably not going to work out too well for your
Right.
IULs. So there isn't one situation that's better than the other. I guess I would think of it as, let's say that you have a 40-year-old and they have three children and they really need the death benefit. In 5 or 10 years' time, if they had a desperate situation in an emergency and they took out the money, I mean, they have to because it's an emergency, but it might be in their best interest to pay back that loan because when they die, and it could happen, the day after they take out the loan that they died, at least their wife, husband, or spouse gets the money as a higher death benefit. So it really just depends on the client.
You say taking the loan out instead of withdrawals because the beauty of the IUL is you can take loans against your cash value, right? What I'm curious about though is you said there's a variable loan interest. Do you know what that number is? Fluctuates usually with you guys?
Right now, I think it's 4.5%, but let me see because it's been a while since I ran an illustration. Let me see. It's in between 5 and 5.25 right now, I think,
Okay.
as far as.
But
Yep.
I look at that going like if the interest in your crediting is above that, then you're safe.
Exactly, Stephen. Exactly. Yes.
That's the reason why I'm curious because you know some people the interest that they're borrowing against is a lot higher. So I go, damn, it's going to eat away at the cash value that's existing in there, then hurts your cost of insurance. That's the reason why I'm asking. So